Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. What a morning. We had core CPI come in stronger than expected at 0.3 month over month. This is the strongest read going back to January of 2018. Now, the year over year was in at 2.1, stronger than the 2.0 expected. This certainly puts a little bit of a dent in the Fed rate cut expectations for later this month. Now, Fed Chair Powell, he stayed course, speaking before the Senate Banking Committee today. It was Richmond Fed President Barkin who said he doesn't see a case for rate cuts. We've seen the Treasury market fall out of bed a bit. Rates are rising here today with that stronger than expected CPI and a somewhat arguably less dovish Fed rhetoric from other presidents. You also had New York Fed President Williams and Fed Governor Quarles talk today, but nothing really rattling things. It's that CPI number that pushed treasuries lower. The dollar really didn't start gaining ground back and going into the green until Barkin's comments and some of the other Fed presidents. But the dollar did go green today. Early this morning, you had ECB ECB Governor Kuor, who could be the potential next president to follow Draghi. He was, he was fairly, I wouldn't call it hawkish, but less dovish on the ECB side. You got the euro pushing higher into 7 a.m. Also as well with those ECB minutes. Somewhat favorable overall to the euro. The picture has picked up a bit. You had German HCPI this morning come in stronger than expected as well. So again, the picture coming out of Europe was a little better than expected for the currency situation, and it had the euro up against resistance near 113.5. Now, that was our resistance level, the same way the dollar index was down there against 96.40. That was a big support level. We've seen both currencies revert back. Again, the dollar has gone green on the session. But again, this is a big tail from that low early today. It could bring a little bit of a tailwind higher into the weekend. Watch this, but there's really a consolidation. Both the euro and the dollar have been fairly range bound, and looking for really some more definitive news as we head into the back half of this month when that rate cut potentially would happen. Now we're seeing the probability of a 50 basis point cut by the Fed at the July 31st announcement fall back to just below 20%. The full the 25 basis point cut is fully priced in. Now, with the treasuries moving lower, with this little bit of a stronger dollar here through the afternoon, we've seen the yen lose ground. The yen has left a pretty big tail. It came off strong support earlier part of this week. We had that major 3-star level on the FX Rundown on Monday. It came off that pretty good, but today's retreat, really signals you may want to be getting out of the way. Left a really big tail. The treasuries, the 30-year is down sharply. It gives you a little idea that there could be some more room. The only thing I think that we're going to see save the yen in the near term, or save the 30-year bond in that move over in the near term, is weakness in the equity market. That would be the S&P getting below 29.90 and seeing additional selling that pushes it lower. That would reinvigorate the tape here for the yen with what the dollar has done today. And then moving on, looking at the Aussie, it's holding ground fairly well. Better data last night coming out of Australia. Overall, just a decent risk asset picture out there. Though we've seen some of some of the metals turn down a bit. Crude oil as well turned down on the session. The Aussie's holding ground, but again, as we talked about yesterday, where your risk is on the Aussie. We're not bullish by any means, but that's probably encouraging some buying down at this level as the market is not selling off through 69. You have that floor near 68. Again, where the line in the sand is. And then for the Canadian dollar, it's really probably one of the stronger currencies out there relative to the US dollar right now. It's definitely out of the 5 that we talk about. It is the strongest relative to the US dollar, but you don't want to really chase this move. We've already had the Bank of Canada looking for this price action to come in a bit. We put some levels out on Monday, the FX Rundown. Those are still valid at the Canadian dollar, and we're looking for a buy opportunity lower. This is, again, more of an intermediate term trade. So give us a call. We're here to help talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial or research there. But remember, futures trading involves substantial risk of loss. Is not suitable for all investors. Thanks a lot.